Anand, after a 700-800 point rally that we have seen in the markets, did you expect markets to see such sort of flattish move, at least going till we get next trigger either from RBI or from earnings?
Well, I think RBI is perhaps a little more nearer, so I would imagine that will be the first trigger that the market will look for. Even before that, I think it is 31st March, which is since it is year ending. There will be some attempt to make sure that the market doesn't fall off a cliff there for the institutional investors. So I think near term it does look like that the market may kind of be reasonably flat.
Right. Earnings will be a big trigger, right? Because for flows to follow, for flows to do well, earnings at least need to be in line, if not a big surprise on the earnings.
Well, certainly, but I don't think there are too many expectations from the earnings this time, and I think the market is actually already discounting perhaps the next 12 months earnings for it to remain where it is. If you were to look at the historic earnings or the earnings that you are likely to get in March, I don't think you will get much joy there.
Right. What are you expecting in terms of outlook to come in? You think management would guide well for FY17 because of the lower base plus maybe the visibility that is coming in because of recovery in various prices and government action?
Well, there are a few sectors where the government action will certainly be positive. For example, steel, perhaps some of the power companies and so on, where we have seen concerted attempts to try and make sure that there is some protective wall built around those sectors. But by and large, I think management commentary will be positive, not because of any visible earnings growth, but because of the fact that what is the option? I would be very surprised if people don't go into the new year assuming that the next year will be better than the one which went past, especially given that the one that went past was a particularly disappointing year and perhaps one of the worst that we've seen in recent economic history. So, most people are bullish because that's the nature of human beings. We tend to look for positives. The real positive, however, will come when you actually begin to see demand grow because of either the fact that the government is spending more and that is trickling through to the economy, or we actually have a genuine consumption bump up, either because of the fact that the pay commission has been paid, or better still because you really have a good monsoon. Right now, all these are just hopes.
Right. Pharma and banks were the two pillars of this earnings recovery. Pharma was growing more than 10-15% every year. Private banks were doing well. Pharma has seen first signs of issues coming in terms of large cap pharma company growth outlook for next year. Private banks, of course, there are issues of NPAs as well. Not as much as PSU, but there are issues. You think they will see earnings cut? That in turn means that the overall number could see a big earnings cut even in FY17. That is a possibility?
Well, for the next year, pharma may see an earnings cut. I don't think banks, especially private banks, will see much of a change in terms of the outlook. On the other hand, you will still probably get a small bump up from the oil and gas sector. And certainly perhaps a growth in some of the domestic cyclicals like cement, perhaps a little better in terms of auto and so on. So by and large, the question really is that are you going to get back into positive territory? Given the fact that the current year is likely to show an earnings growth which is either negative or zero at best, the next year the possibility that it will be in the positive terrain is quite high. That said, the consensus still continues to remain at 14-15% growth, which I think is a little bit of a challenge to achieve. Right.
As far as the overall FI numbers that are coming in every day, emerging market flows are getting in good inflows. That is a positive, and the way it has happened for the last 1 month has clearly surprised everyone.
Well, most definitely. I think the fact that the emerging markets have done exceedingly well and have certainly attracted inflows is something that I don't think, at least a 10% rise was not something that was anticipated. And it's a very good point you mentioned that, the fact is that, for example, YTD, India still continues to underperform emerging markets. And even in the last 1 month, I believe that the emerging markets have done marginally better than India. So actually what we are seeing in India is not really anything to do with the domestic market. It is pretty much a global macro flow change. Now within that, whether India will continue to attract disproportionately high flows, I would argue most lower. They have eased off, which is a little better for the that but not get to a
right. just stay on with us. I think we have some audio issues. By the time we are coming out with the close as well, just 90 seconds remaining for markets to close. GAIL down 2%, BHEL down about 1% or so. Not that great day to end, because we started the 230 factor on a high note and we are ending it on a slightly lower number. But FIs continue to buy. I mean, you can get a sense of that throughout the day in terms of the moves that we are seeing. ITC down about 0.7, Hindalco up 1%, Tata Motors up 2%, 371. Tata Motors was among the top gainers. Sun Pharma down about 2%, 793. Axis Bank up about 1% or so. Power Grid down about 1%, Tata Steel up 1.5, Bank of Baroda up 1.5, 140, BHEL down 2%, 110 rupees. PNB down 0.75, NTPC down about 1.6. Idea was among gainers. It has been losing in for a while, so good to see it going on the upside. Similar story with Bharti up 1.3%, Reliance up 1.3. Infosys down 1%, ONGC down about 0.6, Kane India down about 0.8. HCL Tech, a 0.5% decline. Tata Power up about 0.5%. Coal India up about 0.5%. Ambuja Cement up about 0.5%. Adani Ports 1% higher, 238. Tech Mahindra down 1%, 469 for Tech Mahindra. Yes Bank, actually Tech Mahindra fell in the last half an hour of trading session. IT was overall responsible for markets to go down in the end. HDFC Bank down up about 0.5%. Z Entertainment down 1.5%. Wipro down about 1%. BPCL absolutely flat. HUL marginal negative bias. IndusInd Bank, there was a big block deal yesterday. It's up 1.6% now. Closing bell is there. We've shut for the day. 23 points down on a provisional basis. Not that good in terms of close. One would just look at the Nifty and say that, it's just about 40 points from the highs. But still, when we started, we were 7630, 7640 levels, and now we are closing below the 7600 mark. Lupin on your screen was the top loser, down 6%, 1405 for Lupin. 18 million shares traded for Lupin. Cipla down 4%. 502, 503, 6.5 million shares traded for Cipla. Dr. Reddy's was down 3.5, so that's also a name which declined quite a bit. GAIL was down 2.5. In fact, the entire pharma sector lost out. Sun Pharma at a point of time was among the top losers, continues to be in the top 10 losers for the Nifty. BHEL down 2.5. Sun Pharma was the sixth loser, down about 2%, 793. Tech Mahindra about 1.5 to about 2% in terms of losses. Let's look at the gainers as well. It was Tata Group stocks, so Tata Motors and Tata Steel. Both of them were buzzing throughout the day. Maruti was the top gainer, 2.36%. Tata Motors was up 2.5%, 371, 372. Idea Cellular 2% higher. Tata Steel up 2%. IndusInd Bank up 1.6. Asian Paints up about 1.5, 1.6. Bank of Baroda, Axis Bank, Reliance Industries, Adani Ports are some of the other gainers. Gains to the tune of about 1 to 1.5%. Hindalco, Bharti Airtel, Bosch, SBI, HDFC Bank are some of the other names that did well. As far as mid-cap gainers are concerned, so Manappuram Finance, let's look at that name. It was up 4.5%. Sterlite Technology up 6%. Manappuram Finance up 4.5%. Sterlite Technology, let's look at that name. It's up 6%. Dish TV was up 4.5%, 5%. Sterlite Technology was up 6.5%. VIP was up close to 5%. Indian Hotels up about 6.5%. Not much apart from this that I can find in terms of gainers. In terms of losers, as far as the mid-cap space is concerned, Lycos Internet was down about 10%, 16-17 rupees. Gujarat Pipavav Port was down 5%. Lupin, of course, comes in the list, but it's a part of the large cap name. Jubilant Life was down 5.5, 390 rupees for Jubilant Life. Wellspun India was down about 5% or so. We're talking to Anand Tandon. He's still with us. Anand, one pocket of interest that has been off late has been the cement pack. Ambuja, ACC, Ultratech. Are you of the view that large cap cement can do well?
Well, one is that most of the large cap companies in cement have actually run up quite a bit. Now, that said, while there is definite indication that cement demand will be much better this year, the question remains whether the capacity utilization will be high enough for most companies to be able to raise prices. And fundamentally, the EBITDA margin or EBITDA goes up only when the price goes up, not so much when volumes go up, though volumes do have a positive impact. So I would think that the market is again being a little more optimistic than it should be. But that said, the view on cement has to be positive. Just that I think that the price increase can probably happen 18 months down rather than 12 months term.
Right. As far as telecom is concerned, do you think that's one space that you would want to be? Now we are coming to the launch of Jio. Probably the best of the capex is behind. Maybe we may have a war initially in terms of tariff, but after that, do you think prices may bottom out? I'm talking about the tariff prices.
Well, I don't think tariffs will bottom out anytime soon. I think we have not yet seen what the Jio can do. The only advantage right now that exists is that the launch apparently seems to be delayed again. So to that extent, the Jio is not in the market. The incumbents will definitely be able to take some money off the table. But overall, I would think that until and unless the launch is there and we have some experience of how that changes the market share of respective players, I think it's a little early to be jumping into telecom.
Right. As far as next year is concerned, do you think metals have a chance to see an upgrade? So maybe, a Tata Steel, a JSW Steel, a Hindalco, we may see some upgrades coming in terms of earnings because Street was very pessimistic and prices have recovered. Or do you think the recent recovery in the prices already factor that and earnings upgrade may just follow?
Well, let's look at it first from an international perspective. I think the earnings recovery, the price recovery has pretty much petered out. So I don't think that from here on you will see significant price increase in the international markets, at least in terms of steel, unless and until China's reduction in capacity proceeds at a faster pace than one is anticipating. On the Indian market, of course, because of the fact that you've increased the tariffs and therefore made it more difficult to import, the import volumes seem to have gone down quite significantly. And to that extent, there is perhaps greater capacity utilization. So more than prices, I think it is capacity utilization that may likely improve and will perhaps help the companies. But only the frontline companies which are already producing are the ones that are likely to do well. The smaller ones which have perhaps shut down or are producing at suboptimal capacities will probably still struggle. So the short answer is that I think the pain in the commodity sector will likely last for a little longer, not immediately something that we can see improving.